You can read a chart now. But knowing what a chart says and knowing what to do about it are two different skills. Here is the test. I sit you at a desk on Monday. I give you 10,000 rupees of risk and one instruction. Take 30 trades this week. By Friday, look at what you did. 30 trades, 30 different position sizes, 30 different reasons, no two the same. Stop at trade 15. Ask yourself one question. Why this one? You will have an answer. It will be honest and it will be different from the answer you gave on trade 4 and trade 9 and trade 14. That is the ceiling of stage 1. And read this carefully. It is not a ceiling of knowledge. You know plenty. It is a ceiling of form. The decision never leaves your head, and the head is the least reliable instrument on the entire desk. The head is tired on Thursday. It is greedy after 3 wins and gun-shy after 3 losses. It remembers the one trade that worked and quietly buries the 4 that didn't. And it will tell you with total sincerity that today is different. It is usually not. So let me put two traders in front of you. Same screen, same capital, the same trade at the same moment. Trader A reads the tape and trusts his gut. Trader B follows a page he wrote before the open. On a good day, you cannot tell them apart. Both can be right. Both can post a green week. Now give them a bad day because the system is not built for the good ones. The same setup fails. Trader A, certain he is right, sizes up and slides his stop lower to give it room. The loss runs and runs. Trader B sized the trade by a rule and fixed the stop before he entered. Same losing trade capped at 1 hour. The discretionary trader's worst day has no flaw. The systematic trader's worst day was written down in advance. Now, the 3 questions that separate a job from a business. 1. Can you hand it over? Put a second trader in trader A's seat and you get a different set of trades. The method lived in one man's instinct. Hand over trader B's page and the trades come out identical. One of them owns a skill. The other owns an asset. 2. Can you scale it? Trader A is his own ceiling. He can watch 5 names, well, maybe 10, before his attention runs out. And the instant it does, the edge stops because he is the edge. The page does not get tired. It scans 200 names at once and never blinks. 3. Can you audit it? A bad month arrives because bad months always do. Ask trader A what went wrong, and the honest answer is a shrug. The tape was messy, the reads were off, there is nothing to inspect. Ask trader B, and he opens the journal. The regime filter was wrong in 6 of the 9 losers. One condition was too loose. He tightens it. The leak closes. So hold the 2 of them side by side. The discretionary trader, brilliant, untransferable, unscalable, unauditable. The systematic trader, slower on paper and fundable, repeatable, improvable in production. Let me make this concrete. Here is a discretionary trader's journal. 1 week, in their own words, took the long, felt the momentum, scaled out at lunch, stopped out. The stop was where it had to be. Saw the reversal early, didn't act, missed it. Now sit where I sit. I want to take that strategy and run it across the last 3 months to find out if it actually makes money. Watch what happens. Felt the momentum. At what reading does momentum begin? Where it had to be. 2 rupees below the low or 2%. The machine has nothing to test. The words are not rules. Now watch the other side of it. Take that same instinct, buy strength after a quiet range, and write it as the specification we are about to build. Hand the machine that, and it runs. 3 months of history. Every signal it would have fired, marked, and counted. Not a feeling it cannot read. A rule it can. The point is not the result. The point is that, for the first time, there is one. The decisions cannot be reproduced because they were never specified. What looks like a strategy is a private skill, and a private skill is not an asset. It dies with the mood that made it, and this is not only your problem. Picture a desk with one brilliant discretionary trader. He has a flat quarter. It happens to everyone. What does the desk do? It cannot coach him because nothing he does is written down. It cannot replace him because no one else can run what lives only in his head. The systematic book has no such problem. It hands to a new operator unchanged. People are mortal. A specification is not. So here is the one sentence to carry through this entire volume. A trading system is a written specification. Discretion ends where the specification begins. So what does a specification actually look like? Not a philosophy, a card. One card you could hand to another disciplined trader who would then trade exactly as you do. For the rest of this program, we call it the setup card. 7 fields, everyone mandatory. Leave a single field blank and the specification is incomplete, which means you are back to discretion, just with better stationery. Let me fill one in front of you. An illustrative setup, historical, anonymized, no real security. Field 1, name and I, D range compression, breakout. We label it RB-014. The letters are the scanner family. The number is its slot in the library. A name, so it can be counted. Field 2, the regime it needs. Trend strength above 25 on the daily. A real trend, not chop. And the volatility index in its normal band, 12 to 18. Both must hold or the card does not trade today. Field 3, the time frames. Daily in an uptrend, higher highs, higher lows. The hourly coiled into a tight range. The 15-minute carries the trigger. The big picture agrees with the small one. Field 4, the entry trigger. A 15-minute close above the top of that range. A close, not a wick. On volume, more than 1.5 times its 20-bar average. An event, not a feeling. Field 5, the stop. 180R, the 14-period average range, below the breakout candle's low. A number the market draws, set before you are in. Field 6, the target. 2R, twice what you risked. Optionally, trail it once the first R is banked. Field 7, invalidation. If the daily prints a lower low before target, you are out at any price. The structure that justified the trade is gone. 7 fields, all filled. That is the system. Not a hunch about a breakout, a specification of one. Countable, testable, auditable. Every stage 2 setup you will meet is one of these cards. Watch one field earn its place. Take the exact same trigger, that 15-minute breakout, and run it in 2 different markets. In a choppy, trendless tape, the breakout fires and fires again and fails. Every signal a whipsaw, every stop hit. In a clean daily uptrend, the same breakout holds and runs, same trigger, opposite outcome. The only thing that changed was the regime, that is field 2. And it is why the card refuses to trade when the weather is wrong. And here is what the specification quietly buys you. When every field is a number, every trade becomes a row in a table. Setup, regime, entry, stop, result. And a table can be questioned. How does this card behave when volatility is high? Filter the rows and read the answer. The discretionary trader's journal is prose, a story you cannot query. Yours is data. That is the difference between a diary and an instrument, and it is the thing that makes the review in Volume 4 even possible. A system is not a feeling. A system is a sentence, 7 clauses long, and you could hand it to a stranger. So sit with the question this opens. Your stage 2 library is not one card, it is 10. 10 specifications that between them cover the market's conditions without tripping over each other. Which regimes do they target? Which timeframes? Which triggers? What do 10 Bharath Shiksha Stage 2 setups look like?